Okay, what is up, traders? What's up, tycoons? Super excited for today's video, checking out ICP, giving you guys an update on the daily chart. Man, this thing has been on a massive rally here lately. We're going to go ahead and zoom in and look at the bullish patterns. We're going to go over how to spot reversals in the market and how you can have spotted this, recent reversal using the 61.8, 50%, and 38.2% retracement levels. We're also going to go over the MACD, look at the signals there, as well as the RSI, our relative strength index. So you're going to learn a lot in this video. It's going to be very informational. Make sure to smash the like button and subscribe to the channel if you guys are new, and we'll hop straight into it. So starting first with our three major retracement levels, the 61.8, 50%, and 38.2. The way these work is nothing moves in a straight line up and nothing moves in a straight line down. You get a move up, retracement, and continuation up higher, or you get a move down, retracement, continuation lower. This is called trend continuation. Okay, you can spot a reversal when you break through those retracement levels. Okay, and that's what that would look like, something like this. Now here's a great example, right? And we've been in a downtrend until recently when we just broke our levels. But if you take a look, you see we have this move, we come down, okay, and then we retrace up to the 38.2 retracement level, and we continue heading back down lower, and we continue to do this. And what you do is you basically take your swing high to your swing low, connect those, and it's going to give you the three major retracement levels. These are areas that you need to be cautious in if you're trying to go long. You want to wait for a breakout above these, a break and retest and continuation up higher before, really taking your long position. So if we take a look, we've just continuously rejected our retracement levels. We did it right here. We did it right here. We did it right here as well. And we continue to do that. We've done it again over here. And what we most recently did was we broke out of it, guys. So if you take a look, here's a great example, right? So, we have the move down, retracement, continuation, right? It heads back down lower. But what we actually got was a little bit of a double bottom here. Okay. So we had kind of a W pattern forming, and we ended up breaking through our three major retracement levels right over here. Okay. In my last video, these were the major retracement levels that we were watching. This was a big support level here, 3.674 that we were watching, and we ended up being able to hold it for support. We dipped below it just a couple times over here, but ultimately we really consolidated very well right there. We broke past our retracement levels, right? So we broke past, retested them, and then pushed up higher. So currently we have a bull flag forming. All right. Now we are facing resistance at this middle trend line here of the much larger bearish channel. Okay. Because, it has been a bear market. We have been trading in a bearish channel. Chart patterns are also very useful. Like over here, we had a head and shoulders pattern forming. Okay. And that one went ahead and played out. And we're tracking this bearish channel right in through here. Yeah, so this is our channel right here. We're really just respecting these levels, and we have the middle, the halfway point of this bearish channel here in white with this white trend line. So we are facing that as some resistance. Now, there's a few ways that you can spot entries and also exits, right? And so that's what we're going to do next is we're actually going to take a look at our relative strength index, okay, right down here. And again, you can use this to spot possible entries or exits. So what we're doing is we're actually taking a look at something known as bullish divergence, right? And bullish divergence is an indicator you may see some type of bullish activity in the future. If you take a look, we have a low here, we have a lower low, and then we have a lower low, right? So we've made three lower lows. We're clearly in a downtrend, but look at what we've done at each point, right? We've made a low right here. We made a higher low right here, and then we made a higher low as well. So now we have this bullish divergence trend line right here, meaning that even though this token is going down in price and is decreasing, it's actually building strength along the way. That's bullish divergence. And as you can see, we ended up getting some bounces each time we had that bullish divergence, right? We come down here, we bounce, we consolidate a little bit, bounce, come up to our retracement level, and then get rejected, head back down lower. But what do? We come down and we test our bullish divergence trend line again. We bounce off of it once, twice, and then we get the push up past our breakout levels. We come back, retest them, and push up higher. Okay. Now the MACD is also very useful for this. Okay. So if you take a look over here, an exit signal is going to be this blue line crossing below the orange line. We're going to zoom in on our MACD for a little bit so you can see. Okay. So That's what an exit signal is going to be. And the entry signal is going to be the blue line crossing above the orange line. So if you notice, right, you can kind of see that sometimes the things are aligning together a little bit, right? Like right here, we got a MACD buy signal. Okay, we got the blue line crossing above the orange line. And just before that, we got a double bounce off of our bullish divergence trend line. So now you have two things coming together, giving you possible bullish activity in the future, right? That's how you use these indicators. So what we're looking at currently is we're looking at a strong MACD. We need to be cautious of the MACD crossing below the orange line. If you notice, each time it crosses below the orange line, we end up getting some type of a pullback, sometimes very sharp, sometimes not as sharp. But continuously there's been pullbacks once you get this MACD crossover below the orange line. So we want to see the MACD line stay above, okay? Even if it goes flat a little bit and touches the orange line, that's not bad. But we don't want to see it cross below at a sharp angle and really start trading below that orange line. So that's what we're going to look out for as a possible exit signal after this big move to the upside. But now that we've established that we broke through our major retracement levels for resistance, what we do, okay, is we're actually going to come here. We're going to get rid of that, and we're going to take our fib tool out, and we're going to connect it from the low of where this move started, right? So we have our low right here, and we're going to connect it up here to our high, all right? And we'll just drag this over so it's a little bit cleaner on the chart. Okay, and what we can see is that we have three major support levels that still justify an uptrend. Okay, so just like, on the downtrend, you come down, retrace, and then continue heading lower. We're going to look for the same thing. If we do get any type of a pullback, there's three levels right here that we can still hold to be in an uptrend and continue pushing higher. Okay, those are going to be 4.781, 4.509, and 4.237. We really would like to stay above this 4.781 and get this nice bull flag consolidation right here. We're looking for a breakout above our previous high, and then that'll take us up here to the upper half really of this bearish channel, right? And that's we're making more steps to a breakout of this bearish channel, but first we have to get above to the upper half, right? Because we've really just been trading in the lower half of this bearish channel. Now, there's a major resistance level up here of about 6.033 that you need to pay attention to. We could get some type of a false breakout, right? And oftentimes that can be known as a look above and fail. So if we do something like this, where, we have our range, we're consolidating now, and then we look above, find resistance there at 6.03, and fail and come back into this range, a lot of times that's a bearish signal, and it signifies that most likely you're going to head towards the bottom of the range, right back down to the 4.781. But even if we do that, remember, these are all still going to be healthy levels, for a healthy pullback to ultimately try to continue higher. If we break through these levels, okay, that's when most likely we're going to get some type of a reversal and come back to test our 3.674 major support level. Okay, so that's what you need to look for. That's what you need to pay attention to on ICP. If you enjoyed this video, smash the like button, subscribe to the channel, and I'm out.